Ladies and gentlemen, in today's episode, we are going to be talking about the things that you are going to need in order for you to make $100 every day trading on Binance as a beginner, because it is absolutely possible. You can actually get to make a whole lot more money than $100 every day trading on Binance as a beginner. And this is going to be part one. I'm going to make some other episodes later, but I am going to simplify and make sure you understand even as a newbie. So this is one of the reasons why I am asking you to like this video, be laser focused, and watch the whole entire episode. This is going to be 20 minutes or more of all the necessary relevant information. So I summarize everything that you really need as a beginner in order for you to take your trading level to a whole new stratosphere. And the things that we're going to talk about are very, very easily doable. Remember, I have been trading in cryptocurrencies for over 7 years. So I've got close to a decade of experience. I know what I'm talking about. You can go check out my oldest videos on my YouTube channel, and I have been in the cryptocurrency game for a long period of time, so I do know what I'm talking about. Anyway, without further ado, I really hope you guys are absolutely ready, because we are about to get in. So basically, what do you need in order for you to make $100 every day trading on Binance as a beginner? First of all, you need to have capital. You need to have equity in your account. So the sweet spot for trading is obviously $1,000. $1,000 is going to give you a very good survival chance of you making $100 every day. However, if you really just want to work and focus on your skills, even using a demo account with fake money is absolutely okay, because it's going to allow you to sort of get the necessary exposure and understanding to how these different things work, because everybody has got like a different learning curve. Everybody has got a different way and approach to learning. So if you guys have had some previous experience, you do understand a little bit what cryptocurrencies are all about. You know how to like place your trades, how to make your market orders, your limit orders, and you've got some basic overall understanding of cryptocurrency markets and just these trading platforms, then you guys can go right ahead and use real money. But if you're just an absolute beginner, you can always use a trading demo account. However, this is absolutely easy to do. You can just get right to it, because I'm going to summarize everything that you require. Okay, so the second thing that you need is a Binance account. So in order for you to register on Binance, you need to use my link in the comment section below. So there's going to be a comment which belongs to me. I'm going to give it a like. You're going to see a heart with my YouTube banner on there. That's going to be the legit comment. You can also check the URL in the description box below as well. So use my Binance link, because it's going to give you up to $6,000 in bonuses, and it's going to be easy for you to like get a lot of the perks that I'm going to be talking about. So please kindly use my Binance link in the comment section below. Then the third thing that you need is obviously a TradingView account. So TradingView basically is a website that allows or simplifies technical analysis for you. These guys have got different trading indicators. Okay, so tradingview.com description or link is going to be in the description as well. You need to make sure that you have at least a premium premium access to the website, because it's going to allow you to do quite a lot of things that are really going to help you sort of take your trading levels to the next level. Okay, because in order for you to be very efficient, in order for you to sort of do what you have to do, you need to use the right and proper tools. And this is one of the reasons why I'm going to be giving you a lot of these indicators that you can use. And for the most part, you do not even need to have a lot of sophisticated, complicated trading indicators. All you got to do is stick to the basics that are very important, and those are going to really serve you very, very diligently. So remember, do not use a lot of trading indicators because that's going to give you analysis paralysis. So simplify it as much as you can. Then the final thing that you obviously need to understand when it comes to your quest to making $100 every day is you need to be able to figure out and identify the trends. You need trend trading skills. The reasons why you need to identify a trend and be able to trade in that particular trend is it's going to give you a higher probability of making money, because if you are trading with the trend, you're obviously not going to be doing the opposite of whatever the markets are doing. So this is one of the reasons why trend trading is actually the best. Okay, and there are just a few type of different trades. There are only 3 trends that you need to master. You only need to master 3 trends in order for you to make a whole lot of money. Ladies and gentlemen, in case you really want to ask me some questions, in case you want to be part of my trading group, in case you've got some things that you would like me to clarify, feel free to email me. That's the email right over there. And I'm always going to be able to give you the help and the support that you need. And most important, be part of my trading community. We offer a whole lot of value. So anyway, at this particular moment, I would really love you to be laser focused because we are about to get in the most important aspect of this video. So please make sure you remove all the distractions because this is going to be very helpful. Number 1, what we talked about is having a capital of about $1,000 and your only task each and every day is to make a 10% of your capital. So when you're beginning, right, if you really want to flip and make good, decent amount of money, you need to risk a little bit more. And this type of risking is going to be very well calculated type of risks. So you're not going to be risking without you calculating your risks and just basically making sure that the odds are for you. You're going to be doing this in a very, very safe environment due to the fact that you're going to do a lot of technical analysis. So this is one of the reasons why I am encouraging you to use your whole portfolio. Use your whole $1,000 because I really believe $1,000 is a very sweet spot. Of course, this can be done with any types of money. Let's say, for example, you've got $100, right? If you've got $100 as your capital, you can make 10% of that every day, which is going to be about $10. $10 multiplied by sort of 31 days, that's around $310 each and every month. So you're basically making a 200% profit every month, which is absolutely crazy. So if you've got a $1,000 as your capital, by the end of the month, after watching this video, you should be able to make at least 3,100. You're supposed to make at least, 3,100 somewhere there, because you're going to be making $100 every day. Multiply that by 31 days, that's about 3,100. So that is absolutely going to be a game changer for you. Okay, the most important thing that you need to realize when it comes to trading cryptocurrencies is you need to understand and figure out solid cryptocurrencies to trade. However, I know you're going to get into the rabbit hole of cryptocurrency information, and you guys are going to be bombarded with a lot of projects, with a lot of amazing cryptocurrencies that could potentially do 1,000x. But as a beginner, I really recommend you to stick to Bitcoin or any other cryptocurrency that has got known tokenomics. So tokenomics basically are just data about a coin, such as the circulating supply, the total supply, and the maximum supply. The reason why I really want you guys to stick with solid cryptocurrencies, especially cryptocurrencies with known tokenomics, is due to the fact that you are going to be able to understand data which is verifiable, because a lot of these projects have got total and circulating supply, which is absolutely difficult to understand, and there's something called inflation which is going to affect your trades, because sometimes you might be trading a coin, right? On the other hand, the team, the project managers, the people who are responsible for marketing the team, they're going to be offloading a lot of tokens on the market and just basically dumping on everybody. So when there's a lot of inflation, when it comes to cryptocurrencies, right, a lot of them tend to perform very bad. So this is one of the reasons why you need to have data points about a particular project that you're trading that are very known and verifiable. For example, you do know that the circulating supply of Bitcoin, the maximum circulating supply of Bitcoin is always going to be 21 million coins. You know, as you can see right over here, this is the maximum circulating supply of Bitcoin. There isn't going to be more than 21 million Bitcoins ever in the history of us existing here on Earth. And if you take a look at the circulating supply, right, we already know that each and every 4 years, right, there's going to be a Bitcoin halving and the inflation is definitely going to be reduced. So when it comes to a lot of these different alternative cryptocurrencies, right, they've got very bad tokenomics, they've got high inflation rates, and they just basically deposit more and more coins into the markets. And this really throws off your technical analysis, because your technical analysis is based on predetermined type of data sets. So if you have a project that has got many different conflicting data points each and every month, your TA is not going to be very effective. So if you take a look at what has been happening in the past, right, a lot of altcoins haven't been outperforming Bitcoin because they've got very bad inflation rates and very bad tokenomics. So this is one of the reasons why I would like you to figure out and find projects that have got known maximum supply, total supply, and circulating supply, so that you can figure out the supply and the demand and how often these new coins are going to be circulating in the market. For example, when you are investing in Bitcoin, right, you do know that each and every 4 years, at least you can sort of do technical analysis, which is going to be very, very relevant in the next 4 years. 4 years is a very good period to trade in, because at least you're not already going to be having major black swan events or major setbacks, major surprises when it comes to tokens inflating and just flooding the markets. But if you go to altcoins, right, you guys are going to realize that a lot of altcoins have got token release periods that are way much more often than 6 months. A lot of them have got token releases every 3 months. So if every 3 months, right, these guys are increasing the circulating supply by 50%, right, that's obviously going to affect the supply and the demand of a particular project, and it's going to affect your technical analysis, because technical analysis uses previous data. So the more the data is consistent in the past, the easier, or rather the more accurate it's going to be for you to project into the future. So this is why I really want you guys, especially as a beginner, to stick to non-cryptocurrencies such as Bitcoin. Okay, so this is one of the reasons why I'm really taking this time to emphasize on what you need to focus in, because I do not want you to go into the rabbit holes of altcoin investing, and then you just end up buying meme coins that are really going to potentially do very well, but they end up doing very bad, and then you get just knocked out of the game and you lose 100% of your money. So stick to the known cryptocurrencies. So I cannot stress this point anymore, but you guys obviously understand the reasons why I just want you to focus on Bitcoin, because Bitcoin is the safest and most predictable coin that you can trade in. And whatever technical analysis you're going to do on Bitcoin, best believe at least you've got 4 years in order for that to be sort of offset, due to the fact that there's going to be some more coins added to the market, or flooding the markets, if you know what I'm talking about. Anyway, what's the next point? So the next point is obviously about trend trading skills that you need to figure out. So I have highlighted 3 very important indicators that you're supposed to be using. Number 1, you're supposed to be using heiken ashi candles. Heiken ashi candles are going to help you easily identify the type of trend that you are in. Simple moving averages are also another type of indicator that you need to rely on because they really help you figure out and identify and have a bias when it comes to identifying your trend. So these indicators really sort of help you figure out in a snapshot of a second what type of trend you're trading in, as you do not really have to like have conflicting signals with regards to what is happening as far as the trend is concerned. Simple moving averages are very good. So volume profiles are also very, very important, especially when it comes to trend trading, especially during a ranging trend when it comes to trading cryptocurrencies. So I'm going to give you more detailed information. So remember, if you guys are having trouble figuring out what I'm explaining or how I am explaining it, remember, you can always email me. If you really want me to help you with your trading, you can always send me an email and tell me that you need to be either part of my trading group, or if you need some one-on-one consultation so that you can really have a very good understanding of what I'm talking about. All right, so now let's move to the other slide, because I really want you guys to understand this. So when it comes to trend trading skills, what things do you need to master? What things are very important for you to sort of figure out? So when it comes to trend trading is where you're going to trend trading is where you're going to make the easiest money, the most lucrative trades, and the trades that are just going to be so easy to go with. Okay, so one thing that you need to identify and understand is there are three different types of trades, or rather there are three different types of trends that you can trade. Okay, number one, there is an uptrend, a downtrend, and a ranging trend. So what you have to figure out is, how are you going to be able to find the different types of entries? So remember what I told you, right? When it comes to uptrends, downtrends, and ranging trends, all you gotta do is use heiken ashi candles, simple moving averages, volume profiles, and the vwap. So what you need to do is, because I'm really trying to condense the information that I can give out in this episode, right? When you have time, go on YouTube, search heiken ashi candles, how to use heiken ashi candles, how to use simple moving averages, how to use volume profiles, VWAPs, etc. Like that, you're going to be very effective at learning, because if I oversimplify everything, the video is going to be too long. So please use your own initiative and try to get deeper knowledge and understanding with regards to what I'm talking about. So when and if you identify the type of trend that you're supposed to be trading, right, you now have to figure out your entries and your exits. Entries and exits are going to help you secure your profits. So this is one of the reasons why, once you figure out a trend, you're supposed to figure out when to get in and when to get out. This is going to help you be profitable. Okay, so remember, email me using this email address in case you want to be part of my trading group, in case you want to make that $100 even faster, because we have been doing this for the past 7 years. All right, now that you guys have got a basic understanding of what your objectives are, let's go to the charts, because I really want to show you how we are going to be doing this in real time. So remember what I told you, right? There are only three types of trends. There's an uptrend. Okay, uptrends just basically mean you are having a higher high and a higher low. You get my point? So this high is, well, this particular high is higher than this high. This particular low is higher than this low. Okay, so basically an uptrend is a time during a trading session, or when the markets are making higher highs and higher lows. Okay, that's an uptrend. A downtrend is the inverse of an uptrend, which is the market is making lower lows and lower lows, okay, and lower highs. You get my point? Lower lows and lower highs. This particular high right over here, or this particular high right over here is lower than that particular high, and the next incoming high is obviously lower than the previous high. And when it comes to the lows, right, each low is lower than the previous one. So this particular lowest period of this trading session is lower than that particular low. Okay, so you're having the price continuously outperform itself in terms of losing value, then that becomes a downtrend. So let me give you blatant examples of an uptrend. So this is an uptrend. When the price of Bitcoin moved from around 15,000 US dollars, this was the bottom, and it pushed all the way up to around 60 something, 66 or maybe 74,000 US dollars. So that was obviously a blatant uptrend. And another example of a blatant downtrend is this particular session that we had when the price sort of moved from about 66,000 US dollars all the way down to around 15,000 US dollars. So the markets was consistently having lower lows, and lower highs. Each high was lower than the previous high, and so on and so forth. So the people that identified this particular end of the uptrend here, the people who were able to identify that, okay, the uptrend here has sort of come to an exhaustion and we are likely to start a new trend. Remember what I told you, right? In order for you to make the most amount of money, right, you should be able to identify these particular parts or sessions or times when the market is about to have a counter trend. So let's say, for example, you've been having a blatant uptrend for the past 2 years or for the past 1 week, right? Identifying and figuring out those exhaustion moments when the price no longer can go higher because the market can't find any more new buyers. So basically, the markets are made up of a buyer and a seller. People who are interested in buying a particular contract or an asset or a particular project, and the people who are selling it because they obviously bought it some time back and they want to sort of get rid of those contracts. So these are the two types of people that you need to figure out and identify. Okay, and in order for you to make a lot of money, right, you have to sort of have a bias towards who you think is going to be the biggest majority in terms of trading. If you figure out that, okay, at this particular moment, right, there's a lot more sellers when it comes to this particular project. So if there are more people willing to sell, if I am part of the bandwagon of being part of the sellers, right, and the price is going to end up dropping and going down, right, then you're going to be part of the train, which is obviously going to be driving the price down. Therefore, when the price continues going down, right, you're already part of the train. You're already part of the group of the people that are forcing the markets to react in a certain way. So the only objective that you have is for you to figure out who to side with, the buyers or the sellers. If you're going to be siding with one of these two guys, right, the buyers or the sellers, you need to figure out what things are convincing you to go with them. What are the turnaround events that are making you be confident in siding with the buyers or the sellers? That's the only thing that you need to identify. Once you get to identify these particular factors, you guys are going to be unbeatable. You guys are going to be extraordinary. You guys are not going to have a bias with regards to what your heart tells you. Listen to the markets. The markets are giving you sort of data points that you need to figure out. Anyway, now that you guys understand the role that buyers and sellers have when it comes to determining where the price is going to go, right? Let's take a look at a few indicators that I talked about. So basically, we talked about heiken ashi candles. Heiken ashi candles are basically here. If you go to your trading view, I really believe that you guys are using my links. All the links, all the relevant links are either going to be in the description box below, or they're going to be in the comment section below. So please use my links, because I'm going to give you the best offers and you're going to have a lot of discount. So heiken ashi candles are basically a type of candle that allows you to easily identify a trend. So as you can see, there's different types of candles. There's Renko, there's line breakers, there's point and figure, and there's also the regular, the candlestick patterns that a lot of you guys are used to. So for simplicity's sake, I'm just going to stick to heiken ashi candles, because heiken ashi candles are easily like this. So basically, when heiken ashi candles are in an uptrend, the color is obviously blatant and green. So when the heiken ashi candles are green, just know that that is a basic and blatant sort of uptrend. When they are red, it's a downtrend. So visually speaking, heiken ashi candles are easy to identify what type of trend you're dealing with by just you simply looking at them, and you're going to figure out what type of trend you're using. Because if you use regular candles, right, regular candles are very, very difficult, because it's the data is so convoluted. It's so hard to figure out what is happening, because you've got red, you've got green, and it just becomes messy. Like for example, take a look at this area right over here. If you take a look at this level and area, it's very difficult to figure out what's happening. There's green, there's red. You don't even know whether you're supposed to be longing or buying. But if you take a look at this level, right? This level, let me highlight it. This level right over here. Now, let's go to heiken ashi candles. Okay? Heiken ashi candles are going to make it super easy for you to figure out what's happening. So let's go back to that particular price point where the level was easy to figure out. Take a look at the highlighted parts that we had right over here. Take a look at how easy that is. Okay, so heiken ashi candles also give you an exhaustion point. It allows you or gives you a warning saying, okay, the buyers are beginning to exhaust right over here. So once heiken ashi candles sort of give you these doji patterns, okay, doji patterns, so all right, so you guys need to research and learn a lot. So basically, a doji candle is a candle which has got an equilibrium in terms of strength of the market, either selling pressure or buying pressure, because the buyers and the sellers are equal. They are not really outperforming the others. Okay, so one thing that you have to understand is, in order for the price to go high, it means there's a lot of people who are willing to buy and hold a particular contract in comparison to the people who are selling and getting rid of a certain contract. So in order for the price to appreciate, there has to be more buyers who are willing to settle for a higher price in comparison to the previous holders. You get my point? So when you reach a point where you're having an equilibrium in terms of the buyers and the sellers, this usually tells you that there's going to be an exhaustion of the current trend. Let me explain. For example, you guys already know how to figure out a doji candle, right? A doji candle is an equal candle that shows, that looks something like this. Okay, doji candles look like that basically for the most part. As you can see, there's many doji candles on the screen. This is a blatant doji candle. These two right over here. Let me even further zoom it so that you guys can have a clear understanding of what I'm talking about. So take a look at this. This is a clear doji candle where you have the price going up, going down, and then settling in the middle. All right, that shows equilibrium in terms of the demand. Okay, so doji candles usually signify an exhaustion of a trend. So when you have a blatant prevalent downtrend like that, right? It's been happening for a few periods of time, and then all of a sudden at the bottom you have several doji candlestick patterns. Okay, these usually tell you that, okay, we are getting to an exhaustion of this downtrend, so there's gonna be a pullback, okay, and the market is about to change, because it's already telling you that at this particular moment, right, the buyers and the sellers are becoming equally strong. And due to the fact that we've had a situation where the sellers were more, in order for it to be a downtrend, right, there has to be more sellers. So imagine you are having a situation where there are a lot of sellers, and then all of a sudden there aren't a lot more sellers. You know, like the market is beginning to sort of have more buying power to the extent that now the buying is equal to the selling. So what does that simply tell you? It just simply means that the sellers are reducing. The selling pressure is becoming lower and lower. That really signifies that anytime soon there's going to be a reversal, because now the buyers are beginning to pile up. They're beginning to increase. People who are really thinking that, okay, there is enough fair value in terms of these contracts and the prices, let me just figure out a way to buy and hold. So when that happens, best believe the price is going to reverse. You get my point? So imagine you are trading, right? All of these times you were short selling, you were, going short on the market, and all of a sudden you've got now this turn around and you don't exit. What's going to happen is the price is going to reverse and get back to your entry, and you're not going to make any money. So this is one of the reasons why you have to figure out when to enter and when to sell, because if you did not sell, let's say for example you caught this move, you caught this downtrend right over here, right, and you are like, okay, I'm the man, I'm making money, I'm doing it, and then all of a sudden the price reverses and it goes back to your entry. It even goes back above your entry. Then you are obviously stopped out in your stop loss right over here, and you're back to zero. And then again, the price comes back down. You get my point, your entry. So this is one of the reasons why this particular example is a very blatant. And by the way, I randomly chose this particular level, but it gives you the number one reason why you need to figure out your entries, your exits, and you need to figure out how to identify the market trend. Because if you didn't figure out when to sort of short, you would have sort of missed this move. And if you didn't figure out when to exit your short, right, you would have obviously lost even more money than you entered with, because the price obviously pumped above your entry. And if you sort of didn't do anything, the price again came back down to this level. So you are having trouble and headache trying to figure out what the market is doing. And a lot of you guys are going to give me a testament due to the fact that you always think and feel that the market is obviously messing around with you, like it's playing with your emotions, because every time you sort of buy, the market goes down. Every time you sell, the market pushes up. It's because you don't know how to figure out and identify the trend. Because if you take a look at this price percentage, right, that was a solid 20%. A solid easy 17 to about 20%. So if you didn't close the trade right over here, you would have missed it and you would have been back to square one, which is absolutely ridiculous. Now, getting back to our discussion, right? How easy is it for you to make a 10% on your $1,000 account? Because if you make 10%, right, you're going to be able to make $100. How easy is it for you to sort of make 10% in a day? It's very easy, because the markets in cryptocurrencies easily fluctuate 5 to about 15% in a short period of time. On a regular basis, like in a trading session, let's say for example, in the morning, the price moves about 5% on average. 5%. So if you do those 5% like 3 times in a day, right? If you go 5% up, 5% down, 3 times in a day, right? You're going to make 15%. Easily. So cryptocurrencies are very volatile, so it's very easy to find 5 to 10% on a daily basis. And this is me being very conservative. So yes, it is possible to make 5 to 10% on Bitcoin. Now, if you go to other smaller cryptocurrencies in terms of market cap, right, you're even going to have more volatility. More volatility means more money and potentially more losses. You get my point? All right. Okay, now you guys understand how to use heiken in terms of figuring out when the trend is about to conclude. The other indicator that I wanted to show you guys is obviously these red and black lines, right? So these red and black lines are just basically simple moving averages. They are sort of aggregated in terms of a mathematical formula that really shows an average price that has been increasing. So let me just break it down for you guys. So simple moving averages are going to help you have a bias because they sort of give you a highlight as to what the markets are doing, whether it is an uptrend or a downtrend. So if you take a look at this, right, ever since we were in an uptrend, right, the price was trading above the red and blue line, and it was acting as support. So that obviously gave you an up trend bias right over here. And whenever we're having a downtrend, obviously the simple moving averages sort of they change. They are above and start acting as resistance levels. So let me give you another very good example. Please forgive me, I'm having some trouble with my keyboard right over here. So let me give you an example of what I mean. Okay, so ever since we had this downtrend from here, so let's go to an 8-hour time frame. Let me zoom in. So let's find a downtrend. So let me give you an example of this downtrend right over here. Okay, so this downtrend, the simple moving averages, the red and blue lines were above the price. So you were in a downtrend because the blue and red lines were, on top. So that means you're supposed to be trading towards the downside, meaning you're supposed to be shorting the markets. Okay, so that's a very easy way to do it. If we go to a smaller time frame, you guys are going to be able to see it in a very, very digestible manner. And let's do this. So let's do this. So let me show you the charts and show you what the prices have been doing in a long period of time. Yeah, so there we go, right? So take a look at this. So from this particular price point, okay, we have a bearish divergence, the blue line and the red line. So there's one fast moving simple moving average and there's a slower simple moving average. So if you guys just Google simple moving averages, you understand how to use them, what they mean, etc. So as you can see right over here, this was a defining moment where they sort of merged, and then we had a bearish divergence, and then we had a blatant downtrend. As you can see, the prices continued going down, and so on and so forth. Okay, so that thing happened, and all you had to do was sell and find your entries, your exits, etc. So this continued on until we had a bullish divergence right over here. You see, they are converging at this particular price point, and then this signified an uptrend, and we started pushing towards the upside. Okay, so I have given you blatant examples of absolute uptrends and downtrends. Now, one more trend that you are going to encounter most of the times, as a matter of fact, markets barely trend. Finding an uptrend and a downtrend in a market is going to happen on rare occasions. All right, those extreme volatile moments where the price is just skyrocketing and doing very well, is a very short period of time. Most of the times, you guys are going to be dealing with a ranging market. So what is a ranging market? So let me just give you an example and draw something right over here. So a ranging market basically is the most boring part of the market where the price sort of sticks around in a particular boundary and target or threshold, if I can put it that way. So a ranging market is going to sort of be like that. The price is just sticking to one boring range without even going significantly higher, significantly lower, and it's just like playing around with your emotions. Okay? It does that. It goes around, but for the most part, it's sticking in a particular certain percentage in terms of fluctuations. This is the most hardest and the most frustrating time of the market, and you have to figure out what type of trading strategies you're supposed to be implementing when the markets are ranging, because you can't really use the same strategies when the market is in a blatant trend, either up or down, right? When it is ranging, it's a little bit different. The ball game is different because things are going to be very, very confusing. For example, this particular session right over here was an extreme ranging period, so the people who were buying here were really, really frustrated because the price was going up, down, and there wasn't any clear direction. And this is where a lot of traders lose a lot of money. So if you want to prevent yourself from losing a lot of money, avoid ranging markets. However, ranging markets are the longest period of trading. A ranging market can be 70% of the time, okay? Because trending markets are only appearing and occurring at about 30% of the time. So you find that when Bitcoin was pushing from 15,000 US dollars to about 30,000 US dollars, right? It felt really, really, really quick. But when the price was ranging in a certain level, it takes a lot of time, and this is where a lot of people end up making a lot of huge losses because you get stopped out, the prices comes back to your entry. When you sell, it goes up. When you buy, it goes down. So this is one of the reasons why you have to be part of my group, because I have figured out how to trade a range. Please, if you are listening to me right now, email me right now and say, hey, Mona, I want to join your trading group. I want to have a consultation with you, because I want us to have a consultation session so that I put you up to speed with what you need to figure out, because sometimes a lot of these trading terminologies are going to be very confusing to you, especially if you don't know what I'm talking about. So please be part of the winning team, okay? So the ranging markets are going to be they're going to be heartbreaking, but you have to figure out how to trade them. Okay, so how do you enter and exit markets? Now, entering and exiting markets is something that we're going to discuss in part 2, because I want to perfect your art of finding entries and exits. And all you got to do is, before I make my next video, right, I want you to go and research on the triple screen trading method, because the triple screen trading method is going to obviously help you figure out how to find an entry. When you're in a downtrend or in an uptrend, how are you going to be able to easily figure out when the optimum time to enter your position? How are you going to do that? Ranging trends are very, very important, and the useful indicators that you're going to find out is obviously the volume profiles. So before the next episode, I'm giving you this as homework. Go and figure out and read about volume profiles. Go and read about the VWAP. Go and study and research on the triple screen trading method, because this is going to be the backbone of what we're going to be talking about. Because if I just get into these, you guys are going to have analysis paralysis. You're not going to understand what I'm talking about. So please spend a lot of time understanding volume profiles and the triple screen trading method, and then I'm going to give you a part 2 very shortly, and I'm going to link it right over here in the video somewhere. So, ladies and gentlemen, I really hope that you guys enjoyed that. And was it clear enough? Did I give you a basic overall understanding of the meat of what you need to understand when it comes to trading? Was it understandable? Was it easily digestible? Were you able to like grasp the whole concept? Do you really believe that making $100 per day on a $1,000 account is possible? Please let me know in the comment section below. And I would love to understand what the hardest part of trading has been for you so far, because I want to figure out what type of content I need to make. Please let me know, what challenges have you been facing when trading cryptocurrencies or when investing? What has been your biggest weakness? What things are you unable to do? Is it because you're unable to perform those particular strategies because of psychological barriers, physical barriers, time barriers, etc.? I want to understand your problem so that I can come up with a solution so that we can do this better. Moreover, you guys already understand how clearly I'm able to explain stuff. So imagine if you booked a one-on-one consultation with me. So you can always reach out on my email. The email is right there. And, let's get you to being a profitable trader. You can do this on a daily basis and make this your full-time job. So imagine if you've got 10,000 US dollars as your capital. Imagine how much money we can make. You get my point? If you've got 100,000 US dollars as your trading capital, imagine how much money we can make. So remember, like I told you, I'm an OG when it comes to cryptocurrencies. I've been around making videos for the past 7 years, and the best way to learn is by teaching. I've been teaching and basically doing all this for the past 7 years, which is crazy, So this is all I had for you today. Hit the subscribe button. Watch out for part 2. Check the description or the, attached links. You're obviously going to see part 2 of today's episode, and we're going to continue. So yeah, see you on part 2.